points from the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in on February 18th, 2022, and the stock market is gonna crash. I don't really believe that, but if it were to happen, I want to go over my analysis of how I think it will play out. So, the stock market went down today. It was another wild day, and why this is important, this whole, is the market going to crash? Well, we're right back at these levels from January. So, there's a lot that we got to talk about. I want to go over one of my theories here. I still have the recap in what happened today. A lot of it was the Russian news, if not most of it. We did hear from the Fed, and we'll recap that, but it was mainly Russia, and even tomorrow, we are probably going to be at the mercy of the headlines. So, we got a close market on Monday. It's going to be a long week. Tomorrow is also a very, very large options expiration, so there is a lot of digestion, and really, there could be a huge range for tomorrow. So, we got a lot to talk about. I'm going to go over everything that happened in the market, the plays that I made, even some of the plays that I like that I'm holding, the plays for tomorrow, and then I'm going to do stuff a little different here. You guys are actually, we're going to go through like the news articles live. You'll see what I'm talking about, but make sure you're subscribed, drop your thumbs up on the video, and for real, man, all of you who are on the stream, youtube.com/the stock market every single morning, God bless you and thank you. You guys have been showing so much love, and a lot of people have been locked in. It gets me excited, so God bless you, baby. But before I get into the keys, I'm really just going to show you how today played out. We really did not open good. Even pre-market, it wasn't bad, but as the pre-market leading into the opening started, we started selling off, and it was all on Russia headlines. Apparently, they added more troops instead of not. People were saying that the Ukraine and Russia sides were shelling each other like bombs. Somebody brought up something about a school. Even the United States ambassador, he got clapped. They removed him. Russia expelled him. What else did you have? There was a bunch. Even Russia, Putin called out Biden with inflation. There was a lot throughout the day, and really, you got a bulk of the reaction probably within like the first 30 minutes or hour and a half. We bounced up a little bit. If you were watching today, there was a very weird correlation with bonds. For most of the day, everything was inversed, and then right after this bounce failed to break above VWAP, everything started to shift, and right around here was when Bullard started speaking. But for the most part, it was a large down day. I think it was kind of one of the bigger days that we saw so far this year. It didn't really feel like that, and why? You had consumer staple stocks up, so this wasn't kind of like Monday or some of the other days where everything was down. It was 85% of the S&P, but there still was some names that held up. But essentially, after today, it was just straight down, reacting to the Russia tensions, and something did kind of slip in there. There was a lot of economic data today, but for the most part, it was reacting to Russia, then reacting to Bullard, and then the data on top of it, that just fueled some of the other bond and rate hike expectations. But I will tell you now, those didn't move at all and have actually chilled out. And well, that is my first pretty picture here for the day. I think this is the most important thing, and we've been talking about this. You heard everybody with the hawkishness, what they're pricing in for bonds and all of that, but at the end of the day, just take notice here. Last week, we were pricing in a 93% chance of a double rate hike by March 16th. Today, it's looking like it's now a 35% chance. So really, a lot of attitudes have shifted over the last week, and that's what makes it so interesting, is that we did get some level of the divergence closing. So if you've been watching the videos, we've been bringing this up a lot, and that's pretty much what you saw today. You got a bigger drop here on the SPY, while you got a bigger move up on bonds, and now you're like, wait, why are you bringing up TLT? Don't forget the Fed futures in that chart I just showed you right there. That is the short end of the bond curve. So essentially, even from the beginning of the week when we freaked out on Monday and you saw that gap down, you've actually had Fed futures calm down more than really, I think, the last 7 or 8 days. So pretty interesting there. It shows what we're reacting to, aka Russia and all of that. But like we keep bringing up, just remember, there's a lot that's going to happen till March 16th. And then after March 16th, that's where we're going to start talking about the crash. So before I get get into the keys actually and start. I kind of gave you the recap. Let me talk about now why I think the market is going to crash or how it would play out. So if you've been watching, we've talked about this. This first drop here, it was pretty large. We are considering this as the first wave. You may be able to argue it, only time will tell, but it bounced up and then we started dropping down. This was the second wave, and now we are waiting for the third wave. Essentially, what would define a wave if you go lower than the lowest point from the first wave? So as you see here, we kept hitting lows, we really flushed out, and then finally we were never able to break below there until we bounced, and now we are coming back down. So wave 3, a lot of people are talking about this, and really with everything going on, it makes sense why some people could think this will happen fast, but I want to take you back to 2018. That was the last taper tantrum, and really you get to see a cool little market pattern play out. So we went over this today on stream, but I want you to watch how the waves played out, and just remember this first drop right here, this is like beginning of October, and it didn't really bottom out there till like right around Christmas time. So think about that, but this was their first wave. You see they dropped, you could say that was the first wave, then it bounced up a little bit. Now this was the second wave, and they chilled out, had their little bounce, so now they start coming back down again, and this should have been their third wave, but again, it never went below any of those lows. You had a little bit of a bounce, and if you wanted to correlate this with today's schedule, pretty much 2 more weeks, it went back up, and then eventually it finally broke a little bit, and it even had another mini bounce, but then that's where the real flush crash, whatever you want to call it, came from. So what I'm trying to say, or at least what I'm expecting, I'm going to be keeping my eye out for the third wave, but something about me just feels like we may see something like this because it correlates very, very well with the Fed schedule and March 16th. So that's my opinion on it. I know there's a lot of things going on in the market. Like I always say, man, just get the long term. It is time in the market, not timing the market. That will take you a long way, but there's still a lot of trades, and it is probably going to get crazier until a lot of these things start to cool down. But I hope that gives you some insight. But again, like we already talked about, today was all about the global tensions of data. But like I was talking about on stream, it wasn't the weakest close. Some people thought I was a little crazy. I said it wasn't that fast. Even if you compare Monday, the VIX, a lot of other metrics, Monday was a lot worse than today, but today was still pretty big. It's not like it was bad, but the fact that we didn't close around that 435, 433 and actually held 437, that is good. It's not good because we were almost at 450, but that's what I'm saying, where it wasn't really the weakest. So like we already said, we are going to be at the mercy of any of the Russia headlines tomorrow, good or bad. And then as far as Bullard, the thing that happened today, he really didn't affect the market, which was good. He seemed a little less hawkish than he usually was, but the thing that he said and that a lot of people are hanging on to, he said, quote, they're looking at overshooting a neutral target interest rate. So out of everything that he said, this is the one that is most quoted by everybody right now, and essentially Bullard is pushing together a lot more ideas. Remember, he brought up 50 basis point. He brought up, or some people are thinking, intermeeting, emergency hike, all of this stuff, and now he's saying, well, maybe we push it way past 2 and average out the rate hikes like we averaged out inflation, and that has a lot of scary connotations. But oh, that rhymed, wow. But there was that, and then as far as tomorrow, man, it is really just going to be a big expiration, so there's opportunities for some moves tomorrow, and I will tell you this, on Monday or Tuesday, since Monday is closed, chances are you're going to get a lot of gamma freed up, and we may start to see some bigger moves after that, so watch out for that. But again, with it being a long weekend, and now tomorrow being Friday, expiration, and just seeing how this whole week has culminated, where we close tomorrow in the positioning, that will be key. But essentially with some of these key levels, you want to see if we close closer to 420 or 450. That's kind of the almost 10% range that we got here. But right now we're at like 437. So again, if it goes to 435, 43, like I'm saying, the closer to 420, that is bad. It is good the closer we get up to 450. So watch out for that. And like I said, we are in the midst of wave 3 probably, but I feel like there will be a test of the lows. It won't break it. We get a bounce, and then after Powell data or anything disappoints, then we will get more action. So coming into the company news and events, I'm going to do it a little different. Like I said, I'm going to just kind of show you the articles. Usually I would read these, summarize them for you, pick it apart a little bit, but I have a couple and I want you to kind of see it and read it and maybe give you a little bit of a different experience. But the first one I saw here, here. This one is coming from Cameron Kreis. This dude is a genius. I'm telling you, I really, really like him, but a lot of people are talking about what is going on with gold right now, and really the key driver that they're saying is that it's the timing. Most of the gold rallies, nobody knows why. They're saying, is it global tensions, this and that, but all of the rally has occurred between trading hours. So there was a nice little comment. He was saying, if it was the central banks or demand from like India or Russia, why would they be waiting for U.S. hours to execute? So he said it is an investment element right now. So keep that in mind. Gold went up. It went really, really crazy. That was part of the safe haven. So watch out for that. Another one, this was a big piece of news, and this was, I think, like the third top piece of news that was read, but essentially everybody is talking about the expiration that we have tomorrow. So this could be your second pretty picture here, but essentially a lot of people have their eyes on the line. And what did they say? They said investors are holding positions until the bidder ends, and in overall total, you're going to be having 2.2 trillion of equity expirations tomorrow. So going to be wild. We'll see what happens with that, but watch out for that. And then U.S. ramping up with Ukraine. This was part of it here in the morning about expelling some of the senior officials. There was something even there. There was one comment today, and apparently the Kremlin said in an official response to the Biden administration's security assurances that they were unsatisfactory and that they would have to resort to unspecified military technical measures. So there was a lot of thing with oil, but the big warning that even came from the White House today, it was regarding some of these false flag attacks, and they said they're doing this picture really, it's like, hey, cut it out, Jack, like the video, asshole. But there was that, and then Fed Mester, she came out here a little bit after hours, and she said she backs a faster Fed rate hike if needed, and she did say she would be down with selling mortgage-backed securities. I think the big part that she said was speeding it up on the second half. So she said, if by mid-year I assess that inflation is not going to moderate as expected, then I would support removing accommodation at a faster pace over the second half of the year. And Bullard said something like that, but be careful, because coming into the next Fed meeting, this may be it. Essentially, if everybody's worried about the first rate hikes, all of these Fed people have been saying they are going to be aggressive. So there was that. She also rejected the notion of a half a basis point hike. And then she did say something about guidance, where she says the Fed needs to get away from forward guidance and instead will need to convey the overall trajectory of policy and give the rationale for our policy decisions based on the economic outlook, babba-dabba-dooba. So that was good, at least a little bit dovish. But again, everybody is already pricing that first hike for March. So we'll see what happens. Then Meta. Oh, man, this one's sad, bro. Facebook is no longer in the top 10 most valuable companies in the world. Tencent is more valuable than Facebook. Nvidia is on number 8, bro. Nvidia coming for Berkshire. And Tesla. Oh, man, that's crazy. So pretty wild there, but sorry, Facebook. It's near 209 right now. And again, any levels lower will be key. So watch out for that. And then the White House says COVID cash is drying up, crimping the Omicron response. They said that all of the money so far has either been allocated or spent, and this includes the 1.9 trillion additional package that came after the first stimulus from Trump. So remember, 2020, Trump, he was signing them checks too, man. He signed a lot. They had the full response in the middle of everything, and then Joe Biden came into office. They had another 1.9 trillion, and remember, they were trying to get some more money in there too, but that didn't go through. But now they're saying all of the money has been allocated or spent, and they're seeking $30 million, or $30 billion, to prepare for new variants or waves. So pretty important. There's a couple of different headlines on this one too, but watch out for that tomorrow. We'll see if that turns into anything. And then Buffett, I love how short this article, literally, it's just all about one quote. But Buffett says he had no prior knowledge of the Activision deal. He literally said, quote, had no prior knowledge before acquiring. So good job, Buffett. Good job, Buffett. And then finally, this would probably be the olive branch out of today. If there was anything going to be good, or maybe to highlight that we're probably going to get a week of this back and forth, but Blinken has offered Lavrov, again, Sergei Lavrov, that's the defense minister of Russia. He said that he would like to meet him next week. So we'll see what happens. Again, you can see the little key headlines. Moscow, through all of this, has denied the U.S. claims that they're adding troops, and Europe economies are seeking to limit any hit. And again, oil did hold up because some of that positive Iran news yesterday. So we will see what happens. But those were the top news ones. Again, there was like a couple of more I could have read. I don't think all of them were really as important. Again, we got anything that was really, really important. That's what I try to do, unless you guys want to hear about like Bitcoin or guacamole. Again, we talk about a lot of this stuff here too. There's just a lot of different things. So I'm highlighting what is important here. And again, tomorrow is really going to be about all of these Russia headlines. There will be a lot of volatility with the option expiration. And then really it's just going to come down to what is the market pricing and where do we stand as we get closer to March and ending this out. But watch those key levels for Friday. But that is pretty much it. So let us get into the plays. So right off the bat, I got 3 different stocks that I'm looking at coming into tomorrow. I did make a couple of plays today, and we are holding a lot. I did cut out of some of the forward puts and then some of the earlier puts from this week. They're kind of doing their thing there. So it's a little bit of game of back and forth. And if you haven't watched this week's videos on the butterflies, I would definitely go watch it, because watching how this market's playing out, I am liking how they are working, because even though they're a higher probability or a lower probability of hitting, they still are able to give you some level of protection, and that way you could go cheap with some of the protection so you don't get burnt. But we'll talk about a couple of those. But as far as the first play, surprisingly, I'm looking at the upside, but Walmart and Altria, essentially any of these consumer staple stocks today. If you notice today, they absolutely killed it. That's why I said today wasn't really risk off or panic, because there was still some stocks just going up all day, and it was defensive names like the consumer staples. So kind of pointing towards a little bit of fear, but also a little bit of rotation. But I really liked it. Walmart, their earnings weren't the best, they weren't the worst, but the stock did good. So even post-earnings plays are up. So I'm going to be watching them. I really like Walmart. Altria, they had the most call activity in a couple weeks here today. They did move up a lot, but depending on how things play out tomorrow, they could be a good one. But I'm definitely going to be watching them. As far as the play, it's just the same February play that we covered a couple days ago. They closed up about 100%, so watch out for them. And then the second play, Baba, I kind of got scammed on it, but we will see what happens. It was the news, and there was a news that Alipay was getting put on one of these like banned American lists or a suspicious list. So the stock dropped really, really big, and then it bounced up. I got caught up in the premium. They did go down about 50%. They kind of went up, but it wasn't enough. So we may get lucky. Sadly, I got a weekly. I got like the 117 put for this week. I paid 30 cents, and greed got the best of me. Even though it was only $100, I should have kept it for like one contract. Again, you've been watching how we've been doing it, and that has worked very, very well in this environment. So could have went a little bit smaller, but I do like Baba in general. They have been holding up. I mean, if you have seen Baba's chart, essentially the markets and everything have just been catching up to it. It really has not been doing a lot. So we do have China easing, and that's kind of bullish for them, but we will watch how this plays out here. But I'm definitely going to be eyeing those tomorrow. And then finally, NVIDIA, I went for a post-earnings play. I went on the call side, but it ended up not working. They did hold up, I mean, kind of decent today. I feel like it could have been a lot worse, or for most of the day, they kind of held up, or even, again, we were kind of selling off, and they started edging down, but they already were down 7%. So it was an interesting flush. Again, I went for a call, and this time I did actually keep it small. That rhymed again, too. But I spent $60 for it. I only grabbed one, and essentially pretty much held the value there most of the day. So I think I lost like $10 on it, but I will be holding this one. But again, just keep in mind the market and everything going on. That is going to affect it. And the fact they did have earnings. So if it does really start to sell off and it kind of turns into a negative earnings response, this may even have some opportunity to the downside. So I will also be looking there as well too. But those are the main plays. As far as everything else, I want to go over the butterfly strategy again, or at the very least show you how it looks. And I mean, it kind of worked out good. Robinhood, you're able to see it a lot better, and a lot of people, they were asking me how to close it. Thankfully, if you do it on Robinhood as one order, you literally close it all as one. I mean, this is your price. Again, we bought it for 89 cents. You could see where you could sell it. Boom, you see the gain. But there's a couple of things I want you to notice about this one. One, how it's going up, and it's doing it incrementally. Remember, the whole idea of the butterfly and what it gives us the opportunity for is to make money if this stock market goes down over time. So if you grab a butterfly and it does this, you don't make as much money as if it got to the same point after a month. So essentially, if you just bought a SPY put for $450 when the market was at $470, and then 4 days later, 5 days later, it went here, you probably wouldn't have made as much. And then after it bounced, you would have maybe been at break even. You would have been down here. You would have been confused. But if you did a butterfly over here and it ended up at 480, you would have been up about yesterday. And then now closer to expiration, the further out of 480, depending on your range, that's where you would lose a little bit of money. So again, the whole idea with the butterfly, you need to pinpoint where you think the asset is going, and you need to do it by that expiration. That is why these are lower probability trades. So I want you guys to see the play, and I really want people to understand these because I am going to be experimenting with these tomorrow. Some of you even showed me some weekly butterflies and dailies. You can't do it. Maybe we'll experiment with a little of them tomorrow, but I am definitely going to be exploring some of these because I am liking them. I'm sure by the end of next week, and as we see more time decay, we will get a better idea. And then another thing to notice, and again, because I want to play a couple more of these, you got to be careful because remember, I did the first one on the TD Ameritrade account, but why did I do the second one here? Yes, it would have been nice to show you, but if I wanted the same expiration and same date, I bought a 380 put, so then if I go and try to do another trade and sell it, it would mess up the ratios a little bit. So I want to keep them separate and not get in the confusion, and essentially, if I'm going to do any of these, I have to pick a different range if I'm using the same expiration, or I will have to go to other dates. But I'm really liking how this is. I mean, it looks like it's playing how we kind of expect and want it to, so keep watching these. But again, some of these butterflies and this idea of, you know, what we saw with 2018 or even the Wave 3, it could take a little bit amount of time, so watch out for that. But that was the only other main play. I did make one more play on Lockheed, and I decided to grab this in the morning with all the tensions. Remember, some of the defensive stocks, they would go back and forth with everything going on, so I kind of liked how it was. I don't think the premiums were that bad. I grabbed one of these 420 contracts at like $1.20 or like $1 something. Oh no, $1.40. So I paid a decent amount. It was up to like 180, and now it's like 150, 175 on the bid and ask. So we will see what happens with it. As far as everything else, I'm really just going to be watching all the plays that I'm holding. Again, those Facebook plays went up 200%. We have the Walmarts. I'm really going to watch for those to keep going on. I still do like the Disneys. Those did get kind of clap today, but not as bad as I would have thought. Again, I really like the Facebooks too, but then Wells Fargo, they got clapped, but depending on where it goes from here, I don't know if this is broader sell-off. We got a little bit of hope with the consumer staples, but I'm definitely going to watch for them, but we did get smacked on those one. Again, that is the danger there of the weekly and just really poor timing with a 3% drop the next day. So that was awful, but I still really do like the idea, and I will be watching those. Airbnb as well too. That will be another key. They held up, but we will see. Again, Airbnb, it does good, but you saw how it has been with the market, so we'll see what happens. A lot of the contracts are still holding, so not too disappointed with that. And then finally, just skipping ahead to TLT and the dollar. We already talked about it, and you just saw it. It is converging, and what we want to watch for is that correlation. But now, really see what happens. If you start seeing TLT move up, bonds may come down, and when they do meet up, if they're able to meet up here instead of down here, that could give us our next signal coming into it. But again, today was a lot of safe haven buying. That's why you got it. So if we do watch the yields go up again, I mean, that will be key. I'm still watching this as a level. I mean, just do not get fooled. You've seen this a couple of times, so we really need to see how it plays out at this point, and the bonds are really the big tell. Yes, there's a lot of stuff going on, but remember last week, a lot of stuff distracted the bonds, and really, last couple days, the bonds have chilled out. So if this continues, we may get a little bit more of a lead coming into the meeting, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, you gotta pray for someone, baby. But the code loves you. I love you. I'm gonna see you in the morning. Let's go.